Good morning, traders. Here's your market recap and what to watch today. So, starting with the US dollar index, the index edged slightly higher to 97.75 on Tuesday as markets digest significant revisions to US employment data alongside the Fed Reserve outlook. The Bureau of Labor Statistics reported that the payrolls for the year through March may be revised down by about 911,000, that is roughly 76,000 fewer jobs per month on average. This suggests the labor market has been weaker than previously believed. While these adjustments reflect past data, they reinforce recent evidence of slowing job creation, with payroll growth averaging only 29,000 per month over the summer. As a result, expectations for a Fed easing has strengthened, and Chair Powell has acknowledged mounting employment risk, and traders now widely expect the Fed to restart its rate cut in the September. And technically, the dollar has slipped below the psychological 98 level, and bearish momentum is building. Unless upcoming CPI or payroll revision surprise to the upside, the dollar's bias remains to the downside. Support is at 97.7, then 97, and July's at 96.38 low. Resistance sit at 98 and the 34-day moving average at 98.26. So moving to WTI crude oil. The oil held steady near 62.5 per barrel, extending modest gains from the previous section. The support came from OPEC's cautious decision to raise output by only 137,000 barrels per day from October, which is far below the group's earlier plans, which signals a measured approach to production increase. And on the geopolitical front, President Trump threatened to more sanctions on Russia after its most severe airstrikes on Ukraine since the war began. Any disruption to Russian crude flows could tighten supply. However, upside was capped by Saudi Arabia cutting prices for Asian buyers, a signal of weaker demand outlook in the world's largest consuming region. And on a daily chart, crude has stabilized around the 61.6 to 62 support zone after last week's decline. If prices hold above this range, the rebound could extend towards 63.2 and possibly the 100-day moving average near 64.1. But if 61.6 breaks, the market risks retesting $60.78 and a key $60 psychological level. Turning to gold, gold surged to another record on Tuesday, briefly touching 36.59 per ounce as expectations of Fed rate cuts continues to build. Last Friday's weak US jobs report fueled bets for three rate cuts this year, including a quarter-point move next week. Safe haven demand has also lived by geopolitical tensions and tariff uncertainty. This year alone, gold has rallied near 40%, supported by a weaker dollar, strong central bank buying, dovish policy trends, and global instability. The latest rally not only broke records but also reinforced conviction that the Fed easing cycle is ahead. While short-term pullbacks may occur around key data release, the momentum suggests the next milestone of 3,700 is within the reach, and support lies at 3,600 and 3,553, while resistance now targets 3,700 and potentially 3,750. And last but not least, the Australian dollar. The Aussie dollar broke above 0.66 for the first time in a month, reaching 0.6615 on Tuesday, fueled by broad US dollar weakness. And markets are now pricing in for an 89% chance of a Fed rate cut next week, with some even considering a large 50 basis point move. And domestically, the sentiment is mixed. Consumer confidence slipped 3.1% in September, and business confidence fell to a 3-month low, reflecting pressure on household demand. Despite this, Australian dollar maintains a bullish bias on the daily chart, holding above its 9-day moving average near 0.6550. The next resistance sits at 0.6625, July's 10-month high, with 0.6681 as the next target. Support is at 0.6550 and 0.6540, aligning with the lower boundary of the rising channel. So to wrap up, the dollar remains under pressure from weak labor signals. Oil is balancing geopolitical risk against demand concerns, Gold is breaking records on rate cut bets, and the Australian dollar is climbing on US dollar weakness. With US CPI and Fed meeting around the corner, expect volatility to stay elevated across all asset class. So that's your morning review. Have a strong trading day ahead.